Welcome, dear learners. Welcome to the lecture series on investment management. Dear learners, before we start with this today's session on speculation, I would like to request all the student fraternity to share the lecture series of this investment management to as much as possible so that it will be helpful for other students. So today's lecture is on speculation. Let us understand the concept of speculation. Speculation is an act of trading in an asset or conducting transaction that has significant risk of losing most or all of initial outlay in expectation of substantial gain. So, speculation is a form of investment where people use most probably they use borrowed funds and they make a short-term investment or for a short-term period, investment for a short-term period with an expectation of substantial gain. So that is the reason there is a high risk in speculation. There is a probability of losing the total investments also sometime. But investment is different from speculation. Most of the people confuse between these two terms, that is speculation and investments. They are two different terms, and let us see the points of difference between speculation and investment so that you better understand the two concepts. So here are the point of differences between investment and speculation. As we said, investment is long-term planning. Here you park your funds for long term, that is more than 1 year. Anything that is more than 1 year is considered, generally in the financial terminology we consider it as long term. In case of speculation, it is short term planning, that is less than 1 year. Here, if you compare these two terms on the basis of risk, in case of investments, the risk is low or moderate because you invest your funds for a long period of time. But in case of speculation, the risk is very high because you park your funds for a short term period with an expectation of substantial gains. And if you want to compare these two terms on the basis of return, the return here, as the risk is low or moderate, the return is also low or moderate. And in case of speculation, the rate of return is very high because they want to make substantial gains within a short span of time. That is the reason why they assume huge risk. And in case of investments, investors leverage their own funds. That means they most of the times they prefer investing their own funds. But in case of speculation, people borrow and then they invest in a short term for a short term period to gain substantial benefits. So these are some differences between investment and speculation. I hope you understood the differences between investment and speculations and the concepts of investment and speculation in a better way. Now let us move to understand the concept of real assets and financial assets. See, we were discussing the concept of investment, so it is important to discuss the real assets and financial assets. See, how investment was made in the earlier days and how investment is being done today is totally different. People used to invest in different assets. So generally we classify the investments into two different, wherever you make an investment, we classify into two different assets generally, that is real asset and financial asset. So real assets, assets used to produce goods and services. See, any asset which is utilized, which forms basis for producing goods and services, is called a real asset. But in case of financial asset, it is only a claim, a paper security. These assets are financial claims represented by securities. So, for example, real assets are land and buildings, plant and machinery, etc., which help you in producing goods and services. As I said, in case of financial assets, they are paper securities where you have claims. The examples for financial assets are shares, debentures, bonds, which are securities. Now, real assets are tangible assets you can touch, feel, see. They are movable and immovable. For example, land is an immovable asset. Machinery is a movable asset. This is how they are classified. And in case of financial assets, these are called paper securities as they deal with claims. So, they are intangible assets most of the times. These days, most of the financial assets are intangible and held electronically, like your shares, etc., etc. So these are the differences between real assets and financial assets. In olden days, people used to invest a lot in real assets, but these days people have changed the trend, and most of the people prefer to invest in financial assets. I hope you understood today's session. Before we abort today's session, let us sum up what we have understood in this today's session. We started understanding the concept of speculation. We have studied the differences between speculation and investment, and also the differences between real assets and financial assets. That's all for today. We'll come back with another lecture in this lecture series on investment management. Till then, good day, goodbye.